Everybody for sticking with us. I know this is a long day, so we are really excited for this next panel. And so this panel will be featuring our Opportunity Zone Fuse Executive Fellows who this past year have been at the local government level, working with communities and doing Opportunity Zone deal making and working with these programs and incentives. So this panel will work just kind of a Q&A that we have for the panelists here based on things that we think for the upcoming year with Opportunity Zones and based on the last year. And then we will then open it up for questions from the audience on Opportunity Zones and the projects in different ways they approach the incentive. So with that, I would turn over to Eric.
Hi, Trey. Yes, thank you so much. What I'd like to do now is just dive into some specific questions that we have for our team here that's on the line today, to share some information about this coordinated effort with these unique individuals who served as Fuse Fellows in communities and serving local government throughout Southern California. So I'm really excited today to share with you that when Opportunity Zones were created, they were really a blank canvas. They are really a new community and local economic development tool to do two key things, right? So they're there to create new marketplaces where investors can think about their next investment tied to neighborhoods with economic distress, with kind of certain parameters like 10-year horizons, capital gains, etc. And they're also a tool for private investment. So the Boston University Initiative on Cities Menino Survey of Mayors asked various questions to mayors across the country. One question asked was, who, if anybody, has taken the lead in terms of organizing your community around Opportunity Zones? 81% of mayors said city government. And even though the question allowed them to select multiple organizing institutions, the most commonly cited one, only 20%, was the local Chamber of Commerce. So you can see the second most was quite far from having city government lead. And then when asked, what is the most important contributors to your city's ability to make the most of your Opportunity Zones? Having a dedicated senior staff was at the top of the list, followed by having an Opportunity Zone prospectus, then providing supplementary monetary incentives, and then direct mayoral involvement in recruiting investment. Finally, when asked, what is the job title of the person in charge of your city's efforts around Opportunity Zones? 55% said their economic development director of the department. So interestingly, I'm honored to have worked with these three amazing, innovative, and bright Fuse Fellows who over the past year have helped to create Opportunity Zone ecosystems in the city of Fresno, the county of Riverside, and the county of San Bernardino, and build these marketplaces for private investment in their respective communities. Each worked with their local elected official leadership and their local economic development departments to play that significant role of being what is the most important contributor to your city's or local government's efforts for Opportunity Zones, which is having a dedicated senior staff. And they are those very dedicated senior staff. So and now I'd like to turn it back over to Trey, if you would like to introduce our fellows.
Yes, so I will introduce, and I also have a first kind of question maybe to kick it off, so it kind of be done in tandem. And thank you for that overview, Eric. I just wanted to just tag on and say that we are very fortunate to have these individuals within California who have been able to really orchestrate a lot of very interesting, not only deals, but deals that provide community benefit with that community-led focus at the beginning and the forefront of building the capital stack and developing the project pipeline. So once again, just really lucky to have you all here. I have the first question for you, but it's also in tandem with maybe you introducing yourself. Maybe to just introduce yourself, your background, a little bit about how you came to this position. And then the question I have is, where did you first start? Let's rewind all the way back to the beginning of your placement. What was the first thing you started to do when you became in this fellow role at the local government level working with Opportunity Zones? And we'll start with Gil.
Thanks, Trey. Wow, quite an introduction. I don't know how to follow. I hope I'll measure up to this. Good afternoon. First of all, thank you to the California Governor's Office of Business Development for organizing the event, of course. Having organized similar events in various communities, I know how much work it requires. So thank you, especially to Trey, Kana, and the entire GO-Biz team. Eric, thanks for moderating the panel. Truly, your leadership and stakeholder engagement in the OZ space has been tremendously valuable. My name is Gil Kainan, and my background is in commercial real estate management, investment, development, with really specific expertise in the hotel sector. Before starting my own firm, I worked in private equity, so I'm fairly comfortable with the process of deal making as it relates to underwriting, financing a deal, and all the various components that belong to it. I was fortunate to be selected to work with San Bernardino County as a fellow to create OZ strategies and drive deals. And just a quick background, San Bernardino County is located directly to the east of Los Angeles, north of Riverside County. It's the largest county in the U.S., one of the most populous in the entire nation. And we have 57 opportunity zone census tracts. They're very diverse and full of opportunity, no pun intended. We go all the way from the beautiful community of Needles on the border to the Ontario airport and upland. So a huge community all the way down south, obviously bordered by Riverside. My firm is called Local Equity. We're an economic development organization based in downtown Ontario, not far from the airport. And within the OZ, we really focus on advancing public-private partnership deals that have high community impact, from pre-development through financing, and then provide technical assistance, fund management, all the on-the-ground GP level support. Now, Trey, to answer your other piece of the question, as an asset manager coming from the private sector, it was really eye-opening to work directly with government. Between the 15 cities that have OZ census tracts, there are several that are also in unincorporated areas. We have all those various kind of patches within there, right? We have the valley, we have the mountains, we have the desert. We have varying needs in various areas. And one size does not fit all. In addition, similar to the state, the county acts as support to cities, whereas it can take more active role in unincorporated regions and then supports the cities that are there. When you ask where did we start, well, I'm a big believer in data-driven decisions. So we started with a very dedicated listening tour. We went out, we spoke to cities, nonprofits, investors, developers, lenders, and we came in with specific questions, simple geospatial questions like, I see that the senior population in your city has been growing very highly in this specific census tract versus other. Can you speak to the dynamics of what that is? Why is there a large family median income between the years of this and this? What happened? That allows us to really collect good data to understand community priorities and find common denominators that we were able to start focusing on.
Great. Stacy?
Great. Thank you, Eric, and thank you, Trey, to the entire GO-Biz and HUD team for organizing this. You all have been a tremendous support over the past year, and really excited on this. So my name is Stacey Cumberbatch. I'm the Managing Director of Blended Impact Labs. We are a venture development firm in Southern California. We create alternative models for investments into people and places via alternative capital accelerators and workshops alongside our city and county partners. We specialize in opportunities on capital attraction strategy. I had the honor of being fused for the County of Riverside alongside Economic Development Agency for the county. And in the past year, we devised a strategy and launch plan for how to attract capital to our county across our various assets in Riverside. Now, Riverside is quite large. We have the third highest number of opportunity zones in the state of California. We have 14 cities and unincorporated areas that have opportunity zones, and it extends everywhere from the city of Riverside that hosts UCR over to the middle of the county with the Coachella Valley and our city of festivals, down to the Salton Sea and Blythe on the California-Nevada border. So quite a mix of both types of deals alongside people, geography, etc., that makes it exciting to work with the deal types and projects that's in the county. Previously, I came from both the investing and banking background. I was a principal on a seed stage fund, investing in startups across Los Angeles for the past 2 years prior. And before that, over 10 years in banking and real estate finance, working across underwriting, investor due diligence, and really had a deep background in real estate and finance there. So to answer your first part of the question, or the second part rather, Trey, where did we start? Similar to Gil, started with a deep dive into a 90-day listening tour that I would say even continued throughout the entire year, because we really wanted to understand what is the ecosystem and what do people need within the opportunity zones, and how does that play into the larger economic development strategy, even outside of the opportunity zones, right? This is not a standoff thing, it's a comprehensive plan, and we're one part of this plan. So listening to internal departments within our county, across the different cities that we worked with, across the 14 cities, externally with developers, investors, community benefit organizations, and likewise, and really picked up some key things in terms of what the differences were that people were concerned about across those areas. So for example, the community benefits organizations may have been concerned with community needs and making sure that we really focused on addressing the highest priorities of the community. Investors, we need to make an investment case. How can we best show that we are the best place and project for their capital to flow into? Developers concerned with the time risk and the speed of permitting, for example. So different questions from different parties, and we really needed to understand what people were concerned about so we'd know how to address that going forward and how to guide our strategy. Secondly, after doing this listening tour, it comes down to as well a deep data analysis, outside of our conversations. So I was fortunate to have a specific dedicated person on our team that was tasked with analyzing the data of the county, so we can really present cohesive information to people as we continue this conversation, across Esri, CoStar, all of the private tools that people use to filter out data, in terms of where are the needs? Where is there housing needs that we need to have addressed? Where are there different types of industries that we need to bring to areas? Where are different types of projects that would just be interesting, for example, to get funded, because that would create a new job category for our residents. So as we learned all of this information, we were very tactful in also making sure that we educated the community alongside us the entire way. And this was really to the credit of the EDA. So when I was on the ground within the first month and a half, for example, we had already held our first Opportunity Zone educational event. This was alongside the Milken Institute, alongside Accelerator for America, brought them in and had them lead an Opportunity Zone 101, for example. So anyone who wanted to know about Opportunity Zones were welcome to come and just get that basic information as we learn at the same time. Within 2 months of that, we held 2 conferences on 2 sides of our county, where we were able to have over 300 people that wanted to sit with us for several hours as we brought in tax experts and professionals that had been in this industry for years to really talk about how we can combine opportunity zones with the tools that we have on the ground to make sure that we get economic development and use the tools to the best possible. So I would say that's how we initially started. We started with the listening tour, analyzing and understanding our resources, and then educating the community alongside. The results of that initial part of the first 3 or 4 months prior to the pandemic led way to the creation of our prospectus, and we took a unique approach with that, creating an evergreen prospectus. So not all of our deals are in that prospectus, but rather the data and information on our communities, and that can be seen at rivcooz.com if anyone is interested.
Great. Thank you, Stacey. With that, I'll pass it over to Claire. Claire, you're on mute.
Hi, can you hear me?
You're good to go.
Okay, thank you. So we're going to talk a lot about partnership in this panel, and like Gil and Stacey, I just want to recognize and thank all the support and time that Trey and Eric, you have spent with us this year. It is essential to us, our development as professionals in this space, but also our agencies and our communities, and leading to this showcase today. So it's really all about really having alignment on the federal, state, and local levels, and our partnership really represents that. So of the three of us, I am the only one that is actually on my second year as a Fuse Fellow. I am embedded in the Economic Development Department, reporting to the Economic Development Director for the city of Fresno. And the silver lining on the COVID-19 crisis this year is that it really opened up discussions around equity and inclusion and community wealth building that I don't think were at the forefront of the dialogue around opportunity zones when I first arrived in Fresno. So in this second year, I'm really reaching, aspiring to embed best practices of inclusive economic development into the city's overall strategy. And that starts with just even looking at the metrics that we measure of what matters in economic development. But of course, an important tool in that toolbox remains support for the opportunity zone pipeline. I came to Fresno from the tech industry in the Bay Area, specifically product management, and I worked at Maker Media, which is the company that produces Maker Fairs. And one of our partners in the Maker movement is an organization called Maker City, which explains how to make cities more innovative and create workforces with more makers. And they had published a profile of Fresno called Fresno, the Underdog City of Innovation. And you can still find it if you Google it. And that headline is what drew my attention to Fresno. And the backers of Maker City, by the way, have now launched an OZ fund called Lighthouse One. So I don't think we've entirely cracked that magic formula in Fresno or really anywhere, but developing that nexus between entrepreneurial innovation and economic development continues to be my specific inspiration in continuing this work. So to go to your question of how we got started, use formula as Stacey described, to spend the first order on listening work. And I got actually leaving a little bit.
Claire, your audio is coming in kind of poorly.
So now I'd like to ask a question to Gil specifically, and then follow up with a potential question to Claire. Gil, each of these jurisdictions invested in human capital to attract opportunity zone capital to their communities. You know, many of California's cities and counties are challenged with who should really lead the opportunity zone strategies. Could you share the benefit of having a seasoned business professional provide the guidance to the cities and counties as you all have done?
Sure. So let me start by saying, Eric, that one person or even two cannot unlock the true potential here. While it's great to have dedicated, as many cities call them, COZOs, around the country, it's even more important to provide the education and the technical assistance so that all departments can utilize this great tool. Think about the Department of Real Estate, Zoning, Community Development, Business Permitting, Housing, etc., all including on their various forms the question, is this project or business in an opportunity zone? A simple act like this just results in staff of all levels to ask, what is this thing, opportunity zone? And unless the training was given to them proactively, which is obviously the preferred method, then at least they get to find out and they get to educate themselves. Additionally, as you look around the country, you see that communities that had elected officials championing the OZ benefit and OZ communities, those communities have more awareness of the tools and attract better capital and better development. So while I'm saying it's really is a group effort, that it doesn't rest on the shoulders of one individual or two, there's a lot of actors that need to play into here. Finally, obviously, there's a place for nonprofits here, and I want to give a shout out to Kunal Merchant and David Smith, who head up CalOZ, our roundtable of OZ influencers in California. Their support in communicating with Sacramento is terrific values to the investors I support. And obviously, last but not least, the various levels of government who've been very open-minded and very proactive in the county, who are willing to have that conversation. All of those elements together really support whoever sits in that role.
Thank you. Anything to add to that, Claire?
Yeah, I hope my audio is better now. I blame my headphones. Okay. So I think that what Gil said is absolutely right on it, that I think Fresno, like a lot of cities, thought that one person dedicated to the resource would be able to crack the nut. And as Gil said, that is absolutely not the case. I am still embedded in the economic development department of the city of Fresno, and it has my realization over the course of the year that I have been there is that the best role of the city is really on driving the community development priorities and providing channels and resources for technical assistance and education, and working in partnership with either a nonprofit or some kind of CDC or CDFI to provide that nexus to the lending agencies and the investors. So I also would like to point to the very important role of having an engaged mayor who is representing the pipeline in those conversations. That for 6 months of the project year that I spent in Fresno, obviously this little pandemic that we are experiencing was a huge distraction for our administration. And a lot of resources were devoted to that and to CARES Act deployment. So I think that we have an incoming mayor, and it has nothing to do with intention, but everything to do with context, that new incoming mayor is really heavily engaged in our opportunity zone pipeline and in representing projects. And I think that is the best role of the city, and leaving the technical aspects of the projects that Gil described to professionals who are very fluent in those languages and processes.
Great, thank you. I think I'm going to be doing the next question. I think it ties exactly with what you talked about with COVID-19 and having to adjust a lot of the resources at the local level in economic development and business assistance from office to office. My question, maybe I'll give it to Stacy first, is, given this pandemic and the situation that we're in widely as a state of California, a lot of the focus is directed at support for small business, particularly those who are in many of the census tracts that correspond with a lot of the metrics that formulate things like opportunity zones, that formulate tools like promise zones. What avenues and opportunities do you see for the opportunity zone incentive to play in 2021 to support small business innovation and entrepreneurship?
I'm really excited about this part, more than ever. I think there is a tremendous opportunity for businesses to take advantage of opportunity zone capital that we're only just beginning to see. I think it's a real tool that can be, for example, venture or growth stage businesses that maybe do not want to pursue an exit opportunity, on the public markets, or companies that want to retain ownership of their company, but they may need that initial funding that lays outside of debt. Right. So I think it can be really interesting if they're looking at equity buyback situations, for example, and it can cover a different type of business that typically would be outside of the venture market. So I'll speak to some deals that I'm seeing that may lay outside of the venture market that I'm seeing right now first, and then I'll speak to small businesses. For example, right now, the deals that I'm seeing in Riverside County, a hemp farm on 8 acres of land that would bring in a $3 million investment. There's a water desalination plant over in the Salton Sea that has purchased 600 acres of land and would bring in a $4 million investment to put up that first plant. And that's only on a quarter acre of the 600 acres of land. Working on a deal with a SaaS company that integrates with infrastructure to control the flow of autonomous vehicles. They already have 2 VCs on their cap table, and they want more impact-driven investors and are looking at the opportunity zone mechanism as another way to raise funding. In addition, there's a composting facility that's expanding regionally, and they're also looking for funding and will be putting in their own funding by way of their own funds that they have to roll over from a capital gain. So these are all types of businesses that may not pursue the traditional equity type of fundraising model by way of venture capital, but can be great ways to pursue opportunity zone capital, for example, in a different structure that could be venture debt or impact investment or some other way to be explored. So I'm really excited about those deals as we try to open up the types of businesses that can be funded by equity, because I think that'll just reduce folks' debt burden and encourage entrepreneurship and innovation in the onset and open up more avenues for businesses to grow. Now, if we're talking specifically about small businesses, there are other types of resources that I think can really be impactful for small businesses. One, there's a lot of activity in terms of what is moving into OZs, right? There's federal buildings that are having preference points right now to move into OZs. There are larger companies that want to relocate because of the preference points and priority considerations that Eric and HUD has aligned to OZs. There's going to be so much economic activity happening there or encouraged there that I think it would really be smart of small businesses to look to those areas as well to be in the midst of that. Not to mention that there is an alignment with hub zones to most opportunity zones. So now if you're looking at a business that may need to do federal contracting, they have preference points as well because of being an opportunity zone and that hub zone alignment. So I really think there's wins that aren't being explored and definitely should be. And it can be both for the benefit of small businesses and venture or growth businesses alike. And I'll lastly just add, I think this can be, or rather because it's my space, I think it can really be catalytic in terms of what opportunity zones can be used for on the business side specifically.
Great. So, you know, this is not a top-down policy from the federal government, and what it does is it allows local government and local communities to prioritize investment, create their own markets to attract investment, and really to prioritize community needs. And I'm just kind of curious from your perspective, Gil, if you could share how your clients and local government have addressed their community priorities and needs while building their ecosystem, and especially the focus of those smaller cities that may not have as much staff in place.
Sure, Eric. So you come from the private industry, or I come from the private industry, and one might come with preconceived notions about working with government. But I have to tell you, I was very fortunate. San Bernardino County may be one of the most business-friendly environments in the country, with a very committed and hardworking staff in government, and working with the economic development team on the county level was just a great learning experience for me personally and professionally as it relates to creating P3s and driving P3s and understanding the priority for both all stakeholders around the table. So working along the county government and with various cities, there was a strong commitment to economic growth, no question. Let me give you some numbers. There's 2 million overall population in the workforce. The median age is 33 years old. There's 3 major highways, 3 major airports. The county's median household income in 19 was only $60,000. And that by itself, and the fact that we're at the heart of the county, we're 45 minutes away from downtown LA, just that is already tremendously attractive. Now, the median household income for the OZs in the county was just $35,000. Those are neighborhoods that are 10 minutes away from the other ones that have almost double the income level. So of course there's its upside, the data shows it. So to answer your question, breaking the data that way, and communicating it throughout government and with the public and with investors in such transparent fashion to show upside where there is one is extremely effective. Gets you lots of support points from all levels of government and truly a listening ear from investors and lenders.
I think that's actually a great transition in kind of how you ending that with talking about the points that you're sharing and data points and having to work and managing all those relationships at the local government level. It transitions into my next question, but I actually saw a question in the chat that I think is actually more formidable than, and it touches on the point that you just made, Gil. And maybe I'll actually start with Claire on this one. And then I think I kind of want to hear from the rest of the panel here too, is how does a staff of one or that already is in a position, given the impact to tax revenue at the local level during this time, how does maybe a staff of one that wears multiple hats in their department or at their local government land level, work with opportunity zones in the coming year? This is an issue with small and rural communities that are happening along the state, but having to be able to do many of these multifaceted things. So how does a staff of one navigate this space in the upcoming year? And I'll start with you, Claire.
So we talked about this earlier, that it's really about embedding an opportunity zone strategy into a wider strategy for inclusive economic development and really developing those partners and including specific partners for offering technical assistance to your companies. In Fresno, for the next year, we have really four kind of legs to our chair. We've already created an EIFD for tax increment financing that falls within an opportunity zone. We have an upcoming partnership for a crowdfunding hub for microfinancing with one of our local partners. And that's really to speak to that super small micro business. And for the opportunity zone development, we are planning a technical assistance bank that will really pair with an outreach and education campaign that we're tentatively calling the Fresnovation Call for Projects. And once we've identified those projects, we'll really marry them and matchmake them with established accelerators and incubators to focus on that pipeline and then market them through the prospectus that we already created, which is opportunityfresno.com. So we have multiple facets of the strategy that have now come together. I think that cities and staffers such as myself are good at marketing and administering programs. And that's what local developers are really expecting and local business owners are expecting from cities. And that's the role that we can effectively play. But opportunity zones are not really a program, they're a tax incentive. So I think we can be good at administering a technical assistance bank, for example, but only if we are appropriately partnered with organizations that are very good at developing and articulating those investment-ready projects and really have those very technical skills that Gil and Stacy have described for getting into the nitty-gritty of any individual project. So I think having that complete network of partnerships is really the way forward. And it took us a period of time to really understand, to know what we didn't know and understand how to really move forward. I wish we had had the roadmap to readiness toolkit when I had first landed in Fresno, but we really feel like we are passing understanding into the alignment step of that roadmap.
Gil, Stacy? Maybe from the county level, one of you want to think about it. I mean, we just heard that coming from the city level. Given that question and also this question from the audience, what do you think maybe from a county perspective too, in the same way, wearing multiple hats, working in the same situation given COVID-19?
I really think the county, for example, did a great job of starting to educate people around opportunity zones and providing that initial information and being that hub for communication that's essential. So I really want to give credit there to the Riverside County Business and Community Services Department, because they did a phenomenal job of making sure that anyone that wanted to know about opportunity zones had a resource point to come to say, you know, this is the information, this is where our zones are, this is where our maps are, help with the prospectus, et cetera. I think for a new city or a new county, for example, that would be starting out, also serving as that focal point for organizing at the community level, what are the goals, right? So you know your area, you know your community, you know who the key players are and what they might want, speaking with those community benefits organizations, knowing the data around your community, because now that starts to play into what's presented to, for example, an investor or any other party that comes into the city. So really getting organized around that initial data. There's a lot of templates that can be helpful. For example, Accelerator for America has a template on an opportunity zone prospectus. There's a number of organizations that we've worked with or partnered with that similarly can assist, but being that same hub for that network or that ecosystem in partnership with these private party efforts. One of the things that I'm working on, for example, at the moment is a regional alternative capital incubator, because there needs to be something for small businesses that they can plug into to show, to Clara's point, what are the resources for alternative capital to help businesses grow, whether that be opportunity zone funds or crowdfunding or revenue-based funding, et cetera. So partnering with private organizations that are already doing this type of work that can do the business development and deal structuring, et cetera, I think would be to a smaller organization's benefit.
So Trey, I'll add and maybe paint. Obviously, I agree, and Claire and Stacy kind of crystallized all the upside, but there's obviously a lot of risk in the market right now, and revenue shortfalls for local government will make it really hard to advance any and all economic growth. We all hope for more federal support. We do. We want the check to come, but I also understand the need to balance the economy, avoid inflation. There's a lot of factors at play here. And so the opportunity now, I think, is in the engagement with capital markets and with large corporations. I know for a fact that banks want to reinvest in the areas that have racial disparity. We need to be open, transparent about the issues in each community. Some stakeholders say that banks are just getting CRA credit, and that's the carrot and the stick, but I can tell you that people actually care. This morning I spoke to a large investor who said, if I send out good energy into the world, I'll help others, and that good energy will come right back to me. So get those large employers, get the local banks in a monthly roundtable. Listen to what they're saying and what they want to do for the community. Help them do it. There are often large budgets out there that you can tap into that come from private industries that will help you keep the ball rolling.
Great, thank you. Eric?
Yeah, sure. So, each of you kind of had a year to dive into your opportunity zones work, kind of create these networks that you've been talking about and help build collaborations and educate your local stakeholders. What would you recommend to others that are either seeking to begin the same kind of journey in the similar role that you have, or with others that are working in government that are trying to seek out the same path that you did for success? What could you offer those individuals?
Well, I
Okay,
think
we
it's
started
like
with the ladies.
It's like
Go
any
ahead, Claire.
strategic.
Ladies
Thank you.
first.
Thank you for calling me a lady, Gil. It's like any strategic exercise. It's what do you want? Why do you want it? How are you going to get there? And how will you know when you've achieved what you set out for? So you really have to start with that. I think there is a tendency, and this was true in Fresno, to jump too quickly to discussions of deal flow without that strategic framework. You ultimately obviously want to get to deal flow, and you need to develop that network of resources in order to help you get there. But without the strategic framework, it is not necessarily going to achieve what you really want. And you talked earlier about the incentive, Eric, not being particularly top down. Personally, I wish that it had been a little bit more top down. And I think that the regulatory direction now is to go in the area of transparency and community reporting. I think that that's a positive evolution, and will really kind of help remove some of the noise from the environment, and help us focus on these questions and articulating the relationship between community development and OZ deal flow in a way that is more tactical and more illustrative of the real impact.
I love Claire's point about knowing where you want to go. I think that's key. Like I said earlier, it's not an opportunity zone only conversation. It really is a larger conversation about what you want for your overall economic development, and opportunity zones will be a key part of that. I'm really excited about the mechanism, but I realize it takes all stakeholders and all participation to make sure that it's really geared in the way that the community wants it to be. So I would say two things. One, really take advantage of all of the other opportunities that are aligned to opportunity zones, not only from the federal side in terms of grants and programs or whatnot. There are a number of things that I'm excited about in relation to how that can be used. For example, the Oz preference points and priority consideration can be really impactful when you start looking at grants for rural communities that need to have pre-development work done, right? There is a state grant that is the REAP, that is there for affordable housing. There are the brownfield grants. There's all of these different resources at USDA, EDA, et cetera, that are aligned to opportunity zones that can be catalytic capital in the onset. So I'd really encourage at the local level to look at what those programs can do. And as you're thinking about what you want for your community, use those grants and federal preference points and priority consideration to be that catalytic pre-dev work that you need done, so that, you know, a project can perhaps be made shovel ready, or there's things that's already cleared so that when an investor or a project or developer comes into play, the stage has already been set. The other thing is I would definitely say to continue keeping the community organizations engaged and key, because the data will tell you, you know, so much. Typically data is backwards looking. It's looking at, you know, 5 or 10 year, et cetera, and to some extent, but the community members can also tell you what's on the ground and what they want now. And just having that open flow of communication so that when there is a developer or project that comes down the road, that it's very cohesive and can be streamlined because the conversations were had early on. So those would be the two things that I would say to think about.
I'll add and say, listen and listen. I'm a big believer that you need to get in the car and drive through the OZs, through the neighborhoods, and take pictures. You can't support a neighborhood and a community unless you drove through it and you stopped and you bought yourself a bottle of Coke or Fanta, whatever you like. And then you talk to the stakeholders, which are the organizations in the area and the community, talk to people in similar communities. As an example, I had an MPA capstone team from the University of Southern California do a paper for us on communities that are similar in socioeconomic factors and what tools they might be using that we should consider. And so besides the government, there are a lot of great resources out there like EIG, Accelerator for America, the Milken Institute. They love helping communities. But there are also firms that are leaders in the space, like Offsites. That is it's a digital marketplace of OZ deals. It's free for users to engage in. And so one recommendation I'd like to leave you with is to understand the risk factors with the asset classes that you're interested in. So Claire and Stacy spoke about priorities. Priorities then get translated into asset level strategies, right? So doing a deal is not an easy thing. You spend most of the time thinking about construction risk, operational risk, capital risk, political risk, natural risk. I could go on and on. So as a simple example, investors are looking to invest in a deal. We'll need to make assumptions to understand if the deal is a fit. Those assumptions might include the terms of the debt that they might get. So if you know that deals are happening in your market, having comp set data from databases like RCA and CoStar that I know a lot of communities pay for, but they don't use as much, on acquisition cost per square foot, pulling out stuff that happened out of websites like Offsites that I mentioned, and understanding the debt leverage that they receive, the interest and the yield in similar assets nearby, will help show that you understand what you're talking about, number one. And number two, increase the investor interaction in your community as well.
And just to add on another thought to what Stacy was referring to earlier, HUD has been so effective in really aligning opportunity zones with the grant preference points, but local agencies can look for opportunities to do that on a local level as well. We did that with our CARES Act funding. If local cities have a revolving loan fund, they can build in preference points for those loans or other grant programs. So I think one of the big trend lines from this year is that opportunity zones are not just a tax incentive, they're really becoming a construct for helping prioritize where resources need to go. And especially in this time when everyone needs resources, even neighborhoods that were thriving before COVID-19, they are coming to the government and asking for help. And it is really a challenge to be able to say no to some people. And opportunity zones, by aligning that again on the federal, state, and local level, it allows us to say everyone needs help right now, but these people really need help. And there is a built-in definition and a built-in geographic boundary as to why that is true. And you can look for opportunities to build that thinking into local programs in ways that have nothing technically to do with offering a tax incentive for a project.
Thank you for that. I think that really kind of pairs 2 points that I illustrated earlier when I think what we thought a lot about what this incentive was when it came along for when GO-Biz was working with it. And that's that idea that I think Gil mentioned in kind of the neighborhood level, no two census tracts are the same in the perspective of thinking about your community and your community needs. And really this tool is kind of for fostering those community-led projects that include that stakeholder engagement and be able to do things like do exactly what you just said, Claire, which is create, preferential consideration or local programming around it. That's probably the best way you're actually going to be able to get programming and incentives around and supporting a community because you're actually there at the local level. So understanding that there's all these layers of alignment, I would also just echo Claire's sentiment and encouraging folks at the local level to just think about different ways of wearing multiple hats, but maybe there's some type of program or opportunity in a different local government department that can be able to support some of the activity that's happening in the opportunity zones. I think that's a one frame of mind is a lot of people think solely towards the tax incentive and the capital gains attainment, but there's this larger conversation about what types of people this all brings in. It brings in so many different types of stakeholders into the equation of talking about community and economic development. So I think that just both of those points are really, really sound and kind of defining about what this incentive can mean for people in the next year. I know we're coming on 11 minutes. We have some closing questions, but wanted to see if anyone in the chat would like to ask any questions of our panelists. There is a chat question I will kind of answer about applying for opportunity zone funding as a city. There is, I think what was alluded to is there is preferential consideration for federal grant funding for those who are located into opportunity zones. Is there any, maybe I can change that question a little bit to think about, have you all seen any experience with either working at the county or the community level of actual cities trying to work with a group of stakeholders at the local level to create their own community level fund?
So Trey, maybe I'll start. Look, when you talk about fund management, there's a lot of compliance requirements that are needed in order to really achieve your certification as a fund and maintain it and make sure that investors truly get their returns. One of the tough parts about it is that when you're a fund manager and you're presenting certain returns to an investor, if those returns don't happen, those investors could turn around and point the finger right back at you. So it's important to create an ecosystem of entities in your community that can wear that hat, right? That can drive that ball, that can work with you and understand what's important, bring in the hometown heroes, and then enable them to do exactly what you're saying. And within that roundtable, there could be participants on the board, as advisors that are part of government. But I think part of the important piece is to pull in those chambers of commerce that you've mentioned before, right? To pull in the economic development organizations, CDFIs, the EDOs, the small business investment corporations, all of those great organizations that are out there, get them on a round table. It's a beautiful world, and in today's world of Zoom, it's super simple. And create that mechanism around those individuals in order to pull the money and deploy it. Very similar to what Stacy's doing in Riverside.
I see a question that's being asked, a couple of different questions from participants that I hope you can answer, and any one of you or multiple of you. For small business owners that are interested in learning more about the tax incentive and engaging to find out how they can leverage the incentive, what would you recommend to them to do, or where have you seen good practices within your leadership roles in government to help small businesses, and how can they learn more about the initiative and incentive?
So this is exactly why we're trying to launch our technical assistance bank, because small businesses often do not have the resources or really, frankly, the experience and fluency in these matters that they need to develop investment-ready projects. They may have an investment-worthy idea, but it has to be investment-ready in order to actually land the capital. And so that is exactly the gap that we are trying to fill in Fresno. But short of that, there is a lot of activity in every city area, every area where opportunity zones are concentrated that is private. So if you do not have an agency that is publicly supporting and helping to evolve the pipeline, there is a CPA or a lawyer in your city that knows about these things. So a lot of the activity is private, and tapping into those resources is your second best. But it is, I think it has been a chilling effect, being able to have the resources to get the expertise that you need. There are 500 pages of regs now associated with opportunity zones. It is not simple, and you really do need some level of professional input in order to have an investment-ready project. So it is in any small business owner's best interest to get that, unless they happen to be in an area like real estate where they have the expertise on their own. So just to say, to add, the thing that I like the best and that is most important to Fresno's strategy in terms of opportunity zone equity is that Fresno has a history of capital flight. And we have actually launched a fair number of small businesses that get venture funding, and then to the bitterness of many locals, they will move to closer to where their venture money is. So the best part of opportunity zone equity is that it glues the capital and therefore the business itself to a local place for 10 years. That's the rules. So this is why we are leaning in so heavily to opportunity zone equity as opposed to traditional venture equity. There's a Brookings Institution report that is much quoted in Fresno that says we get $1 for every $212 of venture capital invested in our peer cities. There's a group of 6 in California. So this has been a real sensitive point for us in Fresno, and we are focusing on our opportunity zone strategy to overcome that.
Thank you for that, Claire. And I wanted to pause because I know that we're coming up on 5 minutes. And I think that this last question will really be to round out this panel, but then also to kind of look ahead. So really this question is to kind of think, what are you know, we're near the closing. We've kind of covered a lot of different bases here, preferential pointing consideration. There's the new opportunities that exist for small business in the new year. You know, there's a bunch of different things, but if you had to pick one, what are you looking most forward to with respect to California opportunity zones or California local economic development widely in 2021, and why? And then maybe we'll start with Stacy.
I don't think there's just one thing. I think I mentioned earlier, I'm very optimistic about business investment for opportunity zones. I'm very optimistic about the use of different credits and federal programs that's already aligned with opportunity zones. For example, we have several local resources that we're trying to make sure is aligned with opportunity zones. Claire mentioned the EIFD. We also have an EIFD in the Salton Sea, pending Korea in the city of Riverside. We have a naval and Army research base in Corona that would be great for SBIR and STTR credits or grants. So I feel like there's a lot of resources already at the local level in the county that we can partner with the opportunity zone mechanism to really encourage investments or partnerships in those areas that need the investment. And I'm encouraged by seeing all of this come about because I feel like it'll be very strong going forward.
Claire?
So I've talked a lot about our technical assistance bank. There is a specific grant that we have applied for to fund that. So on the near term, our fingers are very tightly crossed for getting that federal money. As Gil said, we all need support for these initiatives. But I think there are also macro trends that are related to COVID that play to Fresno's already identified competitive advantages. The flight from urban centers, suburban centers, both for companies and for individuals, I think will help us redirect some of this this interest from the coasts into the Central Valley. I think that is a trend that we see happening at both a state and a national level that plays to the advantage of what we like to think of ourselves as a gateway city in Fresno, and like all of the post COVID moves, I think are to our advantage, and we hope to tap into that, as well as a post-COVID boom in startup activity, which is a mother of necessity scenario, but we see it definitely playing out and being validated in national numbers. And we hope that we can support and accelerate that trend within Fresno, within the existing business community as well.
Hey Trey, I know we're coming up to the top of the hour. Two things I wanted to mention. Number one, on your last question, one of the resources I'd highly recommend small businesses to reach out to is SBDC, supported by the SBA. Phenomenal organization. They have all the tools that are necessary. It's usually just a phone call away. There's forms on the website. Just go on it, fill it out. A business advisor comes back to you. They're so well organized, and they're federally funded, state funded. I don't know where the money comes from, but they have money. And so, and they help small businesses. So that's number one. Number two, what am I excited about? Both administrations have shown terrific support to the OZ. So the OZs will continue to be there. They will continue to see success, which means that they're both dedicated to low-income communities, which also means that there will be more federal funding, I hope, coming towards tools in those areas. So be really close with those organizations that are in your area, the community development financial institutions that you have there. Create a program with them that you can easily direct into those businesses. I think that will be a key to success to those communities in 2022, 2021, and thereafter.
Thank you. Well, we are here at the 3:30 mark. I wanted to say just thank you to you all. First,